Well, good evening, everyone, and thank you for joining us for tonight's business banking webinar. My name is Pamela Clement with Valley Strong Business Banking. I'm joined this evening by Deanna Blaze, Senior Vice President of Business Banking at Valley Strong Credit Union. Before we begin, I'd like to cover some housekeeping items. We plan to answer a few questions from the audience. To submit a question, please click on the Q&A button on the bottom of your screen. We will answer as many questions as we can live, and if you feel your question has not been answered through the presentation, please fill out the survey after the webinar and supply your contact information. Someone will reach out to you directly to answer your question. Some questions may be more appropriate to be discussed at an appointment. If this is the case, we will respond to you with our contact information to set an appointment and then dismiss your question. We have a lot to cover tonight, so I'm going to go ahead and turn my video off and turn the presentation over to Deanna Blaze. Deanna?
Good evening, everybody. Thank you, Pam. I appreciate that warm introduction. Let's go ahead and get started in our presentation today. So as she said, my name is Deanna Blaze, Senior Vice President of Business Services here at Valley Strong Credit Union. And we've been in business banking now since 2019 here at Valley Strong. I've been in business banking now for the better part of 20 years myself, and I hope you enjoy our presentation tonight that we're going to go through various different topics around different services for business owners. Before we get into that content, I'd like to walk through the agenda for this evening. Now, normally this presentation is delivered in person. However, we formatted it for this particular medium to be over webinar experience. So bear with us as we work through that. I also wanted to let you know at the end of this presentation, you will also receive a survey, as Pam mentioned, but along with a participation guide that you can go back and revisit some of the concepts that we're going to review tonight. We're going to go through the business banking fundamentals, how to choose the right financial institution that fits your business needs. We'll talk about the varying different banking services available to your small business. We're also going to speak about improving your chances of getting the loan if you are in the need of a business loan to get things moving or you're trying to expand. So we'll talk about that later. Normally, also in your participant guide, we would go through a post-test and a pre-test just to evaluate how you've learned through the process of going through this workshop. So with that, we are going to continue on to talk about a few items on identifying the business services that are commonly available to small businesses. And we can explain how some of these services work and the advantages and disadvantages. And then along the lines of explaining how some of the business owners will decide which banking services are best for your business, and then walk through the several different options for deposit insurance. Now, one of the items I'd like to speak to you about is when you're thinking about your business banking fundamentals, and we're walking through all the questions that you may want to think about when you're getting into, gosh, what services am I going to need? One of the elements I'd like to ask as you think about for your business, do you need regular pay employees or vendors? Are your customers generally paid via check or credit card or electronic transfer? And do I want to be able to download statements and transactions into my software? And then will I need to make deposits after banking hours? If so, do I need a night deposit service? And do I need locked deposit bags? Or am I going to use a remote deposit scanner? Those services are available now with technology and how much it's advanced. Think about your cash needs. Does your business need a lot of change or small bills? What are the fees to buy cash from institutions? What are my loan needs going to be? Do I need startup funds, maybe an SBA loan or a line of credit? And maybe I'm just trying to build my credit for my business. How helpful would it be to have a banker who understands all of these things about your business and can help you navigate these different options when you're interviewing different institutions before you decide where you want to bank your business? Well, let's talk about what are some of the services that you are going to be touching base on. We talked about a few. Normally I do a poll here at this point, but we're going to continue on to the subject of our presentation here and talk about choosing some of the right financial institutions and what are the needs that you're going to have and match those up with the institution's service offerings. So when you think about, for example, perhaps your need to make deposits in your account through an ATM or maybe after normal business hours, most institutions will list their core products and minimum balance requirements on their website. You can also call your financial institution or a few in your area and ask for an appointment to meet with a branch manager or possibly a business banker that they may have available for you. And usually those consultation appointments are free to you, and you can see if their services will align with your needs. Now, you can also test what is the customer service like. Perhaps you already have a relationship with your institution and know someone who would really love to help you through these different questions that you might be having about your business and where do you want to bank. Now, a good relationship with a key person or maybe a business banker, I highly recommend that. It will help you increase your ability to establish credit and also save you money in fees and enhance your business opportunities through talking through the advantages of the banker's maybe experience and how they can guide you through navigating the different options you have for your business when you're going to have banking accounts and maybe lending accounts there. You want to talk about, how accessible is this institution that you plan to visit? Are they within the branch distance, near your business? And are you looking for different alternatives such as 24-hour access, and depending upon what that's going to look like for you? If you plan to use a drive-through, ask the institution if there are any restrictions or transactions that can be made at the time when you come through a drive-through window. Also, does the business banking services meet your needs, and what are the costs? Now, this one, you want to evaluate the services that each institution has, and you might ask for a side-by-side comparison to make sure that you understand even an estimate of what you could expect, the types of activities and services you're going to need, and what might that cost your business on a monthly basis. You should also find out how long it will take before you can access your deposited funds, because waiting for checks to clear may impede or slow down your cash flow process. And writing a check when you do not have the funds available to cover the deposit could likely lead to costly charges. So you want to find out, are there overdraft protection options for you? Now, another question that commonly gets asked of us is the institution NCUA or FDIC insured? Now, credit unions are insured by the NCUA and bank institutions are insured by the FDIC. They're very similar services for insurance on your account, and typically the standard insurance amount on your business account from the NCUA for our credit union is insured up to $250,000 per deposit account. Now, for the business, they'll look at one main account for the company. On the consumer side, there's a little bit different parameters for deposit insurance based on beneficiaries on your account. Now, take the time to verify that the institution is insured and understand your coverage limits. The limits here for NCUA or FDIC insurance covers all deposits, including checking and savings accounts, money market accounts, and certificates of the deposit. And the standard insurance amount, like I said, is $250,000 per depositor. So if it's for one business, it's going to be $250,000. You can find more details at ncua.org. Now let's get into a few other facets about checking accounts and some of the different types of accounts that covered here, such as the small business or commercial checking, your payroll and or operating accounts, and sometimes also known as zero balance features, which will sweep from one account to the other and maybe any fees associated with that. And keeping in mind, you really do not want to mix your business and personal transactions, as referring to no commingling. And this will really help when it gets time to the end of the year. When you're ready to file your income tax return, you'll have a much easier time processing your income and expenses for the business when you keep all those transactions separate. Now, a commercial checking account is really geared towards a higher volume transaction, and usually also you have some fees assessed, but there are varying different options such as analysis accounts that can help you to earn an earnings credit that would go towards offsetting some of the fees for the services that you're going to be using. It'll offset some of those expenses. So I would highly recommend you take a look at all the different types of accounts and really think through the types of activities or services that you're going to be running through. Once you open your checking account, know the rules governing your checks and read through the agreement that's typically provided for you. Now, many states have adopted a universal commercial code, which generally holds the institution, not you, the account owner, liable if someone forges a signature on a check, but that doesn't mean you could never be liable for losses. So in general, you can protect yourself from liability by securing your checks and thinking carefully about who in your business has access to blank check stock and reviewing your statements when they arrive, or even through online banking, you can get them more immediately after your month end closes, and report any problems right away to your financial institution. Your deposit account agreement may include more information about your liability for forged checks, so you're going to want to read through that pretty closely. And for legal advice, definitely, I encourage you to reach out to an attorney that would be happy to discuss some of those features for you. Now let's talk a little bit about avoiding commingling and ensuring that your accuracy on your bookkeeping, and try to avoid any tax consequences. You'll want to follow a good protocol for transferring of funds and make sure that the different services for transferring of funds within your financial institution really fits your needs. Now, more information about the risks of commingling is detailed in your participant guide, so I encourage you to take a look at that at the end of this presentation. Let's talk a little bit now about payroll services. Now, institutions and such as Valley Strong, we can offer, or business partners for payroll services that can help cut down on the number of checks issued and the potential for fraud or forged payroll checks. And that can come in a form of direct deposit or electronic ACH services, which allows you to electronically pay your employees as well. Now, these services permit really an entry of payroll or retirement and workers' compensation insurance payments, as well as federal and state taxes. There's also numerous reports that can be generated for your records, and the reports can include summaries for each employee, your entire payroll, or history with date ranges and data filters. Now, payroll can be also direct deposit to an employee's account. If your business has employees who do not have a bank checking or savings account, talk to the institution that you're evaluating and see what options they have for you and your employees. Many institutions will be happy to work with you to provide direct deposit for your employees. And for example, they may be willing to meet with your employees to open free or low-cost checking accounts. So many institutions have nice products out there to meet the needs of those who need a second chance checking account as well. And these accounts are open for individuals whose names appear on a check reporting agency report, maybe for a formal problem account. So keep in mind, there's lots of opportunities if they just do a little research to find out for themselves what's available to them. And I'd like to walk through, when you hear information at the institutions you might be evaluating, referring to cash management services. This is typically services that help you manage your day-to-day inflow of your income, and maybe the different services you can use for outflow or payments being made. Many businesses do find it helpful to have an operating account and a separate payroll account. This is to ease the burden of conducting transfers to a payroll account, but you can set up a sweep feature on your operating account that links to your payroll account, and this is known as what's called a zero balance account. Now, this feature, you can only make deposits into your operating account, and you will only write payroll checks out of the payroll account. As each check is presented to the institution, the system will automatically move the funds that need to be moved from the operating to cover those checks being cleared on the payroll account. It's a great feature. This also helps to prevent fraud. By monitoring the sweeps, you would quickly know if amounts were greater than your payroll. This would be an indication of an error or highlight an altered check or forged check. Remember, the payroll account will remain at zero at the end of the day's processing. So be sure to ask your financial institution that you're evaluating if an account with a zero balance feature will be charged a fee. And if you prefer to make transfers to payroll yourself, you can consider doing that through online banking access. Now, some institutions also offer sweep investment accounts, which are used to earn interest on larger balances. You can put an agreement in place for 2 accounts where this balance is determined on a minimum balance requirement that stays in one account, and the excess funds can sweep into an interest-bearing account or investment account so that those deposit dollars are earning money from interest overnight, and you capitalize on the use of your funds to the full capacity. Now let's take a look at some of the payroll services in addition to that. And we'll talk a little bit about the savings account options and CD options. Now, savings accounts have limitations sometimes on the number of withdrawals that are permitted each month. And so you'll want to find out from your financial institution, if you're setting funds aside, if there are any limitations on that. And many institutions do offer share certificates or certificates of deposit, and they can be insured with traditional FDIC insurance, and you can agree to keep the money in account for a few weeks up to several years. In return, the financial institution agrees to pay you a higher interest rate than you would receive from a checking or savings account. So if you need to make a withdrawal on the money before the CD matures, you want to be careful about if you have to pay a penalty if you're taking the money out before the maturity date. The traditional CD is now only one of the choices, but now you might be able to add money to the CD and switch to a higher interest rate or withdraw money early without a penalty. Some institutions will require you to deposit at least $500 into a new CD, but some allow you to open one with a smaller deposit. So check what the options are for you and make sure that your funds that are sitting there idle continue to work for you if you don't need to access those funds in a longer period of time. So something to consider. Let's talk about how you can access your business account. Online banking allows businesses to conduct nearly every facet of their banking business without even entering a financial institution these days. However, authorization and viewing and transaction limits sometimes apply depending on the institution. And institutions set up access and issue different types of keys for login after the completion of authorization forms. And the authorization process may vary between institutions, and it may vary between technology as well. So take a look at what some of the features are and make sure it aligns with your minimum requirements of what your business is going to need. Now, I also believe that one advantage of banking online is that information is normally updated throughout the day. So you can view your account information and the activity within minutes of that activity happening. So that's another advantage, is that the front and back images of your checks that are clearing your account, you can view that online as well as previous statements. And this eliminates charges for services to provide copies of lost checks and past statements. So it's a great way to monitor to make sure things are clearing your account correctly. When banking online, you want to take some steps to avoid fraud. So if your business becomes a victim of online theft, there is a chance that the money may not be recoverable and the institution may not be responsible for that loss. So going back to make sure you're taking a look and reconciling your statement at the close of the month. So you'll want to look for that activity. Now, direct deposit and ACH debit and credit processing and wire transfers, those are all services that can provide quick online transfer of funds. So a lot of online providers at institutions will give you that ability to turn on those services within your online banking. So check it out at each institution you might be interviewing and find out how their online services work for you as a business owner. There's also a service out there known as Lockbox, and Lockbox services permit you to focus on doing business while your payments to customers that get mailed in to you are processed by another institution and then settled out of your account through technology. So your customers will send checks or other payments to an address such as a PO box of your Lockbox provider, and then that institution will process and credit those to your account and provide a record for you. So that's a wonderful service that works really well. Another element of that service is remote deposit. And remote deposit essentially is like having a little scanner at your desk where you can scan those checks in without having to come to the bank. If you don't like if you do not feel like walking or driving to your financial institution to deposit a check, you would just rather deposit it through the desktop remote deposit. Now, you'll need a scanner that's compatible with most of the banking services. Some institutions provide the scanner, and many of the institutions don't, depending upon the volume of checks that you would be running through a scanner. So there's multiple levels of scanners that are check readers out there. So you'll need a scanner to capture the image and a personal computer to securely transmit that image online. So most of these services run through their business online banking platforms, but it's a great service if you want to learn from each institution if they offer that service and what is the cost associated with that. So definitely it's a benefit of saving you time and not having an employee out of the office during their business hours. So RDC, as the terminology you'll hear a lot, allows you for quicker access to your funds because checks deposited over the internet are generally available in 1 or 2 business days, as opposed to sometimes 5 business days for regular paper checks. See here, I'm going to go on to deposit insurance. And let's talk a little bit about the details of insurance and some of the basic principles. And we get this question a lot with credit unions: how are my funds insured? And typically the coverage is per depositor, and a depositor may be any person, does not have to be a citizen or even a resident of the United States, or any business entity, organization, or even like a governmental entity. So deposits maintained in separate NCUA institutions are separately insured. So deposits maintained in separate branches of the same NCUA or FDIC institution are not separately insured. So what that means is if you had accounts at multiple branches, you still only get the one account under that business name insured for $250,000. Now, if you're organized as a sole proprietorship account, this includes funds collected by an individual conducting business using a business name. Now, an account opened in the name of a sole proprietor is insured by the NCUA under the single account ownership category. The single account ownership category includes accounts titled under individual's name with no beneficiaries designated on the account. So in the unlikely event of your institution maybe failing, the NCUA would add together the funds in your sole proprietorship deposit account with any other single accounts owned by you at that same institution and insure the combined total balance up to $250,000. Now you can learn more about the FDIC insurance at the ncua.org, which is the National Credit Union Association or Administration, which is still a governmental entity. All right, so let's walk through now some of the other services related to like your business debit card and some of the owner risks associated with that. Your business debit card allows your business to make online purchases or point of sale transactions without the use of credit. So basically it's going to debit whatever those transactions are immediately out of your business operating account. Now, the debit cards are most often issued in the name of the owner of the business. Only an account signer is authorized to conduct the transaction on the account. So as the owner, you have the additional ability to have other signers on the account. And if you want those people to have a card, check with the institutions that you're interviewing and to see what their policies are around authorized signers or that are non-owners and what access capabilities they have. So if you decide to have a card issued, beware of the risks and using caution with debit cards, and will debit cards protect you from fraud and loss? So sometimes a dishonest employee could use the card for personal purchases or obtain the maximum allowable amount of cash each day through an ATM. So even greater losses could take place over a weekend. As an example, if an employee leaves your employment, it is up to you to get the card back or cancel it. Now, federal law does provide many protections to consumer holders of debit cards, such as limitations on liability if the card is lost or stolen, but not to business account holders. They're treated a little bit differently. So while business credit cards can have some of these protections, business debit cards don't really have that same protection. So because federal law doesn't protect business debit cards, it's very important to understand the terms of your bank account agreement regarding the liability for unauthorized transactions. So take a look at what that means to you and the evaluation of the different financial institutions you might be working with, just so you understand and know what that may look like for you if your card, business debit card, is compromised. So let's talk now about merchant services, which can expand your capability for increasing your sales. And I think it's a great opportunity that you can accept consumer credit cards, and many financial institutions do offer merchant card processing services, and that will allow your business to accept credit and debit cards for payment for your goods and services. So make sure you're asking your institution if they can offer that service for you, and what are the fees associated with that, and what are the different technologies that you want to choose in order to how you're going to be doing business for paying for your goods and services. You know, you might think about if you are providing wholesale products, then the merchant services may be able to establish an online system to receive payments from your buyers, which can decrease the time from billing to receipt, which is an improvement to your cash flow. So some of these services, when you're thinking about merchant processing services, it's a great way to improve your cash flow on a day-to-day basis. Now let's talk a little bit about within your participation guide. When you get this at the end of the day, refer back to page 16 on your guide, and it's going to list here for you a table where you can capture your banking service needs. And I highly encourage you to utilize that page within your guide to help you evaluate the services you think you're going to need, and then compare that when you're interviewing the banks out there or credit unions to see who is going to be the right fit for you based on the needs you have and based on the cost of services, so that you select the appropriate bank for you. Now, one of the other elements that we should also pay attention to is the ability to reconcile your accounts and what are the options associated with that. So when we think about when you should reconcile, you should be receiving a monthly statement either in the mail or through your online banking access, which I highly recommend because it's immediate activity available to you. And you should be looking at this at the end of your processing month. And the reason why we recommend that is that you're looking for anything that's happened in your account that's out of the ordinary, that you're also protecting yourself from fraud or transactions that don't belong in your account. And the more frequently you're reconciling, the better you are to understanding where you are at your bottom line. Here, I just want to give you a few tips for reconciling your account. The amount encoded on the bottom right of a check should be the amount for which the check was written. So take a look at that. And retain your remote scanner software reports. You can download those reports right to your network and save those. And you can reconcile the interest on your business loan accounting records to the applied rate each month to save time at year end. So check your principal balances as well. Reconciling your accounts may mean investing a little bit of time each month, but I definitely agree it's worthwhile to avoid the frustration caused by possible errors or fraud, or the need for research months later. Now, some people say, oh, this is just such a pain to do. I don't have time to sit down and do this, but I highly recommend you do this every month. Now, I want to talk through a few key items around the fundamentals of protecting your business from online theft. And even if you do not plan to use online banking, you need to be vigilant to avoid fraud and scams. So remember, unlike consumer electronic payments that are generally protected by the federal consumer protection laws, the liability for business electronic payments are governed by contract and state law. So that could leave you and your business liable for online theft. So pay attention to that. And a very important step you want to take to protect your business is to regularly monitor your account, to look for suspicious transactions, and report any questionable transactions to your financial institution as soon as possible. The faster a fraud transaction is identified, the better chance that the institution can stop the loss and recover those funds for you. So that's another good reason for monitoring your accounts through online banking. Always be on guard, against the inside jobs, potential employees that you think are very trustworthy. All while they may be very trustworthy, it's still a good idea to check on their transactions and understanding what your internal controls might be. And I encourage you to work with your CPA or a bookkeeper to help you through what that might look like for your business. Make sure your computer also has the latest operating system and antivirus security updates. And many of the most high-profile losses to businesses have involved known vulnerabilities that could have been prevented by using updated software. So we highly recommend that you have some security software on your computer that has some antivirus security available to you. And we recommend that you run those security alerts and screening on your PC regularly. You want to train and educate your staff too to think critically and pay attention to the phone calls and emails that relate to your business banking relationship. Many online thefts are actually multifaceted and sometimes begin with seemingly benign social engineering. And a thief will use these tactics to discover individual pieces of information that, when combined with other information, may provide enough to conduct an online theft. So pay attention there. And another scam that's out there, it's watching out for fraudulent transactions and bills. So scams can range from consumer payments with a worthless check or fake or credit debit cards to fraudulent returns of merchandise. Be sure you have insurance to protect you against those risks. So those are some common elements we're seeing out there. Now, if possible, consider establishing a dedicated computer for conducting online banking and your cash management activity. Using a dedicated computer can avoid the risk of computer viruses and malware that can be inadvertently downloaded with general internet use. So pay attention to that as well. And another great service out there for business owners that a lot of financial institutions provide is Positive Pay and Debit Block services. And this is available at many institutions, and it's really geared to help you protect your account from being subject to either ACH or check fraud. And you provide the institution with a list of expected ACH transactions and checks, along with the expected amounts and dates. And the items are processed, they are matched to the list that you provide, and mismatched items will generate a notice to your office through email for payment approval. So a debit block is another service offered by many institutions that allow you to control whether or not an electronic ACH debit transaction may be made against your business account. So if your business plans to use your account primarily for paying employees or vendors and writing checks, there may be no need to allow business debits to your account through ACH altogether. So think of those particular services. So let's stop there and let me ask Pam, do we have any questions out there from the group?
Deanna, yes, we do have one question, and that is, should I keep my personal and my business account separate at separate financial institutions? Is that a good idea?
That's a really good question. We know that there are advantages and sometimes disadvantages of keeping accounts at multiple institutions. Now, some people refer to have one main operating institution and another institution as their backup institution. However, one of the benefits of having your personal and business at your main institution all together, it gives you the ability for that institution to see your full deposit relationship. And some of the benefits of that, if you ever need to borrow from that institution, you may be able to get better pricing because you also have your full relationship there. So I do highly encourage that. It gives the financial institution, the full view of your how you're doing your finances, whether personal and business. So great question.
One more question, Deanna.
Okay.
And that is, I don't have a separate federal tax ID number for my business. How should I go about that?
Another great question. So what you can do is actually go out to irs.gov And you can request that federal tax ID right from their website, and you will get an email confirmation and immediately be assigned that number. So great question there. And that's great when you're looking to have your different entities set up and you're thinking about what type of entity should I be set. You'll definitely want to have a separate tax ID. Although as a sole proprietor and some business trust accounts, you can use your social security number on that as well. But as soon as you have employees, you're going to need an employer identification number. So those are a couple of the triggers when you're thinking through your federal tax ID for your business. But great question.
Okay, there's no further questions at this time.
All right. Okay, let's talk now. We're going to move to commercial lending, and let's talk a little bit about how the small business really typically needs to borrow money, oftentimes to buy equipment and also otherwise finance some of the items for your operations. And there's multiple ways that you can do that through different loan products at financial institutions. So understanding the different types of financing is important as well. And most small businesses and their operations can be financed through 3 key ways, not including investments or loans from family and friends. So one of them might be from a personal line of credit, such as a credit card, either an owner's personal card or business card guaranteed by the owner, or a home equity line of credit. Sometimes a small business owner's home serves as the collateral, and that's commonly used, but sometimes have a disadvantage with that. Now, small business owners willing to put their personal credit record on the line may find a credit card convenient, but it can be expensive in financing. But sometimes many startup companies start there. So it should be something that you consider when you're trying to get a business off the ground. Now, owners using a credit card can quickly find themselves taking on debt that cannot responsibly be supported by projected revenues from the business. So the significant problem with home equity lines is the potential to lose your home if you are unable to repay those funds back. So enter into some of those loan types thoughtfully before you consider taking out that equity, investing into your new business. Now, a business line of credit can permit your business to borrow up to a certain dollar amount and repay it in installments with interest over several years. Lines of credit may be a flexible way to build credit, and business owners should think carefully, I think, also before borrowing on a line of credit to make sure you have enough revenue coming in to pay that line down to zero for a period of time in that year. Consider how and when you're going to generate revenue to pay the loan, and make sure you're not using short-term financing to finance costly long-term. For example, using that line to purchase a vehicle, that really should be used for a lengthier term loan, such as 3 to 5 years, etc. Now, that leads us into business term loans, and which establish a set dollar amount to be repaid in installments, like I said, over 3 or more years, and are commonly recommended for purposes such as financing equipment or vehicles. These loans often are secured by the asset that is purchased. So term loans mean predictable payments for you every month to month until that loan is paid off. But unlike lines of credit, a business may have to make a new application if it needs to borrow additional funds. So think about that. For example, term mortgages will normally be financed longer than a term loan for equipment. So depending upon your type of business or situation, consider asking about these types of financing, commercial financing tools. So such as manufacturing loans, possibly veteran and military. If you've been a veteran in the military, look for those opportunities. And maybe even programs for distressed area loans as well. So the financing of any equipment, or maybe your inventory, maybe you're in a business with plant and machinery that you'll be recorded by the institution to protect its interests. So a deed of trust is the normal instrument recorded for real estate as well. And then the Uniform Commercial Code, known as UCC liens, are financing statements. They're used to give public notice of a financial institution's interest in that property. So Those are two documents that you'll get familiar with. And then if you're financing receivables or inventory, that is usually for purchased inventories repaid through cash receipts, but it's evaluated on your ability to collect those receivables on your business credit as well. So financing receivables and inventory, it can help with your cash needs due to seasonality in your business if you happen to be a seasonal business. And in general, that amount loaned on receivables and inventory will not be 100%. So there'll be some subtractions from the availability on your receivables when that's being reviewed. Your institution can tell you the maximum they will loan for this type of financing. And typically it's around 80% of the eligible accounts receivable. So take a look at what those different percentages are if that's the type of loan you're looking for. The other one out there, like we talked previously, is your business credit card. They're a convenient option because they allow you to defer the payments, and that's that you will be using the card issuer's money and not your own, which is good at times until you pay off that balance. So choose a credit card after reviewing them carefully. Take a look at the rates that are being provided or any limitations. If you need them for employees, find out if that institution offers employee cards. That's another great way to offer convenience to your employees versus using petty cash and having to maintain that as well. So just something to think about. Now, there may be some alternatives to issuing a business credit card to your employees. So I encourage you to talk to the different financial institutions that you're evaluating and find out if they have the employee cards based on their travel needs, what that might look like. And some solutions could be automated clearinghouse, or referring to ACH, which it can ACH to their account to cover expenses, or a card preloaded with a specific amount. So it really varies what each institution's card programs are out there. So if that's a tool that you're looking to utilize, evaluate that from institution to institution. I want to talk a little bit about the SBA and the SBA loan guarantees. If you need to borrow some money, sometimes for businesses who've only been in business for a short period of time, the SBA does offer some great programs. And the SBA is backed at a certain portion of loans to help borrowers qualify for better attractive interest rates. And if you're in a need for a loan for less than a lender's minimum amount, you can ask your financial institution for a referral to a lender that participates in SBA and maybe even in the microloan program. So they also combine business coaching and technical assistance with access to these loans up to $50,000. And they have other programs that can help you through, such as the 504 program and many other programs, finance real estate or sometimes business acquisition. So it's a great program to get in touch with. And we highly recommend being connected to the Small Business Development Center, which offers wonderful services associated to help business owners really free of charge for that consultation. So I highly recommend you take a look at that as well. And then let's talk about improving your chances on getting a business loan. And to minimize the risk and ensure full repayment of a loan, most institutions are looking at the 5 C's of credit to evaluate your ability and willingness to pay back the loan. So in your participant guide, it has a lot more detail in there that goes through the different levels of the 5 C's of credit, but we'll walk through just briefly what some of those look like. So in your capacity, you're looking at your ability to repay the loan, and that's one of the most critical factors that the lender's going to look at. The capital is the money you personally invest in the business. C for collateral is a form of security you're going to provide. So know what collateral you're being offered if you do need a loan. And conditions has 2 meanings. This refers to the condition of the loan, how will you be using the money, and then will it be used to expand or to purchase equipment or inventory. Conditions are also economic, so locally and in your industry, which could affect your business and the ability to repay the loan. So an institution is going to take a look at all those factors. And then the fifth C is character, which refers really to your personal integrity. How do you handle your personal finances? That typically spills over into how you're going to handle your business finances. So pay attention to the history. You're going to want to know your credit and what does your credit report say for you as the business owner. And if you need assistance with taking a look at that, reach out to your financial institution for help on that. Now, a lender must evaluate your ability to repay a loan based upon your projected cash flows, which is your revenues, and not on the value of your collateral. So it's two things you're going to want to really get familiar with. Now, when we're taking a look at the commercial lending side, it does help to prepare a comprehensive business plan showing exactly how the loan money is going to be repaid. So the business plan should also include an overview of your company, an explanation of your products or services, and an explanation of your operations, a marketing plan, and the reasons your company or concepts differ from your competition. So you're going to want to know that well, especially if this is a startup company that you're looking to just get off the ground. I highly recommend you do a business plan, and the SBDC has wonderful resources to help you with that. Another element that we'd like to cover with you is wealth and retirement planning. And some of the key concepts are, starting and saving for retirement can be easier than most business owners think. So by starting a retirement savings plan, you will help your employees save for the future and for yourself. And what's more, retirement programs can provide tax advantages to both the employer and the employees. So it's definitely something you want to consider. And I highly recommend, even if your company isn't ready, evaluate with your financial institution if they do offer those services and what do they recommend. And if you're not ready, they can help you get ready to, when your business is healthy, to start those retirement plan savings. So it's a great opportunity for you to take advantage of that. And there are three key types of IRA-based options out there also, which are simplified employee pension plans, which are available to any size company. There's also a simple savings incentive match plan for employees. And these are plans that allow a business that has 100 or few employees. And also a payroll deduction IRA. So if an employer does not want to adopt a retirement plan, it can allow its employees to contribute to an IRA through payroll reduction. So there are many ways that you can help your employees save for the future. Let me go back one there. Okay. Some of the key points I want to make sure we think about in choosing the right financial institution to fit your needs. The products and services that each bank or credit union can offer may vary, honestly, from institution to institution. And what also varies quite extensively are the fees that may be charged for these services. So it pays to compare what your institution offers to what several other institutions serving your community offer. And then go with the best institution that's going to align with what your business needs are. These institutions offer a wide range of loan and deposit products and services that can meet your needs. So for example, you may be able to deposit checks into your account from your office without visiting the institution. If you need to borrow money, consider an SBA guaranteed loan. And another option there, as we think about other items that we want to remember, institutions can help your business run more smoothly with merchant payroll retirement services and online services. And we want to remember to keep your business and personal accounts separate. You want to take precautions to avoid fraud or other preventable losses. And then establish a cushion for unexpected expenses. And that's by putting some money aside. Know your personal credit score. If it's low, take steps to increase it. And to improve your chances of getting loan, remember, refer back to those 5 C's of credit. And then build a strong relationship with the lender before, during, and after the loan process. This is a really critical point, and that we highly recommend you build that relationship. Now, let's just take a look at if there's any final questions that you have, anything else that you've learned, and what other workshop topics we'd like to hear about from us. I'll pause there and see, Pam, if there are any additional questions before we get to the conclusion of our workshop.
Yes, Deanna, there's a couple questions. Does the credit union offer the same business loans as a bank?
Great question. That's a question we get asked a lot. And yes, we do. We're being compared to other maybe community banks out there. We do offer business credit cards, business lines of credit. We have term loans for business autos, as an example, or other types of equipment that any business out there might need, as well as real estate loans. If somebody's looking to finance a building that they're occupying, or maybe they're looking to make an investment into a piece of real estate that they're just going to be an investor on, we can do those same loans as well. That's a great question.
Okay, and the next question I have, how would I go about setting up a retirement plan for my business?
One of the things I recommend, and I'll just give an example what we have here at Valley Strong. We have a wealth management department, and many other institutions do as well. And you'll want to make a meeting with an institution wealth management area, because typically they cover the administration of retirement programs, and they can actually help administer the retirement program as well. So I would say your first step is ask for a wealth management department within your financial institution, or speaking with a business banker and ask them for a referral to a company that provides plan administration and setup services. So great question.
One other question, how does Valley Strong compare in loan, equipment, loan rates to other institutions?
That is another great question. We definitely take a look at our marketplace to see what type of rates are being offered out there. And our rates at Valley Strong are risk-based. And so it does depend upon, we have a couple of requirements that can help lower the rate, which is your length of time and membership. We also take a look at the, as we were talking about credit, the business owner's credit background. And then we take a look at, the collateral that's being used for that equipment and looking at loan to value. So it is based on a range, but very comparable to other institutions that are out there.
Another question, will this deck be sent out after the presentation?
Yes, these recorded decks will actually be posted out on our website. And if you'd like to receive the deck, put that in your comments at the end of the workshop tonight in the evaluation section when you complete the survey, and we'd be happy to get that over to you. And remember, your participant guide will be coming to you as well, which has a lot of valuable information in it.
Okay, and that's all I have.
All right. Okay, everybody, thank you so much. And I am going to turn it back over to Pam for concluding our workshop.
Okay, well, thank you again for joining us this evening. We hope you enjoyed the content of the presentation and you leave feeling a little more informed and prepared to run or start your business. After we end the meeting, you will be presented with a link to take a short survey regarding tonight's webinar. This is where you can ask any additional questions. If you feel your question was not answered in this presentation, just be sure to include your contact information so someone can reach out to you. And on behalf of Deanna Blaze and the entire team at Valley Strong Credit Union, thank you and have a great evening.
Bye, everyone. Have a good night.